Let's get some perspective on why the RBA has once again kept rates on hold. Joining us from Sydney is Ivan Colhoun, who's head of Australian economics and property research at ANZ Bank. So, Ivan, tell us about what the comments that came along with the report are telling you.
They're actually very interesting in that they're almost identical to last month's statement, and really the statement hasn't changed very much in either of the last few months. Some of them have been almost identical to each other. There's a few very subtle changes here in terms of they're talking a bit more about the European uncertainty has increased. There's been a little bit of a downward revision to investment intentions outside of the mining sector, and also commodity prices are a little bit softer. But apart from that, it's almost identical to the statement that was published a month ago.
So what does it mean in terms of when we're going to see rate hikes resume at the RBA?
Yeah. That's the very big question, obviously. I guess if we look at the sequence of statements the bank has made recently, in April they said there was no case for a change in interest rates. Then in May they said they're carefully assessing the evolution of both growth and inflation. When we got the minutes, they told us that basically if the economic growth and inflation forecasts turn out or evolve as they expect, we need higher rates at some point, and that at some point is still very much the conjecture of markets. Obviously, it wasn't in June, and I think when we get the minutes in the middle of this month, we'll get the same take, that at some point they think they'll need to push rates up, but not just yet. I think most people in the market were thinking it's more likely to be July or August, but every month that goes by, people get less certain of that. The Reserve Bank is certainly talking tough, but it hasn't felt a need to move rates as yet.
I wonder if the downturn in the global economy will perhaps allow them to hold for even longer.
Well, that's something people have been talking about. I think in terms of the story, the bank's view is very Asia-centric, particularly at the moment. We're being driven off what's going on, particularly in China and Asia. Their overall view of the global economy is that it will be at trend or stronger. The US data that's been a bit softer, I think the bank's consideration is that the US economy will be quite soft for some time and Europe will be soft for some time. So I don't know that the global economy is really turning out significantly different to the bank's own expectations.
Just explain to us this difficult balance that the RBA has to strike, because you have obviously this mining investment, the mining industry absolutely booming. That's pushing up wages throughout the rest of the economy. But the mining industry, interestingly, doesn't actually employ that many people.
Yeah, it's true. And just one thing there, so far it's mainly pushing up wages in the mining sector and related sectors, and it hasn't spread particularly, and that's really important because in 07-08, that strength in the mining sector was spreading in terms of wages much more broadly through the economy than it has so far in this cycle. Yes, the bank is trying to navigate for the whole economy it's only got one tool, which is the interest rate, and it's using that for the whole economy. And people characterise the Australian economy as very much a two-speed economy. So some sectors are doing extremely well, others are doing not as well, and some are finding conditions very tough. And the bank is using interest rates to try and keep overall inflation contained. I think it was interesting, about 5-6 years ago, people criticised the RBA as saying monetary policy was being only directed to control Sydney house prices. That was, pretty true at the time, that house prices were the focus of the bank. They considered that the biggest threat to inflation. At the moment, they consider the mining boom and the pressure on the labour market from a very low unemployment rate as another challenge to the inflation target. And they believe that across time, keeping low inflation has been very good for the Australian economy, and they still remain very focused on that.
Ivan Colhoun, thank you very much for shedding some light on the Australian economy for us.